Welcome to TradeTheMBI.com. This is John. The report is for the 25th of October. Well, we can see a softening here on the MBI extreme readings, but we're still well above 33 in that. So from that standpoint, worst case scenario is just more sideways back and forth. We've got short-term buyers faded off on the DOC. Not really much change in short activity. It's pretty much flat to where the red DOC is. So it's consistent with the fact that we made a new high, didn't close up or near it, but pulled back a little bit into it. But the shakeout congruent 1268. The previous high was like 1230, if I'm not mistaken. We can look at it right here. Yeah, 1230. So higher highs, higher shakeout reading, all good. No complaints with any of that. Interesting though that while the S&P is making new highs, NASDAQ is not, and a little bit softer in that you already have MBI dipping below the 40 level here, so a little bit more could take it down below the 33. And you also see a clear distinction between rising cyan on the DOC, which indicates more short activity than we're seeing from the other market, and notice the difference in shakeout not matching from a congruency standpoint, but still rising, so still has a chance to get there. If it doesn't, though, obviously it would appear that the NASDAQ is going to potentially lead any signal change as far as that goes. Euro not doing anything, still within rising DOC red here has been enough to just keep it from utterly collapsing, but Eurozone is dead for now. Oil keeps pushing towards highs. There's no change in that reading. I mean, that is just white MBI reading all below 10 here, just maintaining that continued push, which is only going to generate higher and higher costs. Rebound from TLT driving rates down. That's because a lot more people are moving into the safety of treasuries. Turning to Bitcoin, we can see that from the short side read, we had a series of positive extremes, all dictated down here on the extreme histogram positive. So the retrace back to the previous highs at 64. No shock with that we broke down, filling the 62 level. The next one down here was 59, which is currently in the process. And again, despite all the tout of how wonderful it is to be long Bitcoin, strategy report shows short side trades making far more than long side, at least within the year that we're looking at this year. So take that for what it's worth. And so when you hear these, ETF and pro shares, everything coming out, just know that the opportunity for the opposite side of the trade just gets a bigger opportunity. And if you don't believe that they'll take advantage of it, then, well, you'll miss out on quite a bit. From a 50K standpoint, we started to see the first signs of early weakness as the MBI white moved above red there, but we were challenged with magenta and yellow still rising, and then they got back above 33, and then that triggered the start of a decline, took out from that TP MBI reading long setup there, and then oftentimes when that happens, you get a little bit of a rebound, and then that second wave tends to fail. And looking at what we're seeing from the reading right now with that white spike as it is, and already have magenta lower, it's in a short configuration as it is right now, and so we'll see if that exacerbates itself going into the beginning of the week, because we ended clear tail to the downside from that. A little bit bigger volume, still fits within one screen picture, so not horrible. When we had the MBI magentas coming, and something to look for when you're watching those setups, I look for that white MBI to stay, well, if it dips below white and comes back above, in this case it stayed above it. The turnaround usually happens when magenta moves back over the white. You can see that with the magenta dotted here. Similar thing happens within this broader short configuration. We ended up with one little spike, but of course we had this series of no closes above 23%, so it really maintained itself. in the weaker side. But right as these violet dots end, which represent the shakeout moving below the -13, you can see that we still were within yellow, but at that point you had clearly rising DOC red, shakeout was improving, and you have magenta had crossed a couple bars earlier from the bottom peak above white, and that led to the start of a new uptick right there. And we ended up with a couple more that were just sort of like flat in between. It's always concerning when you have white MBI crosses the red and then it comes back below it, and you get several of those is usually an indication that shorts just don't have enough. And in this particular case, it was pretty clean with that rising gold as it took place. It just popped up to a new high and caved back. So it wasn't that area was incorrect. It's just it still filled right back to it. We ended up too also with that spike of weight mid-range before the close, and it ended up with the move that took us not quite to the zero. So it was still the expectations to the 0%, even though it's rising to 23 or 29. So theoretically they could connect somewhere in the middle of that range. But MBI extreme histogram here, still below the red line, so the dark magenta there, suggesting that we're still in a little bit of soft setup within that. So that's the long and the short of it, and in this particular case, it was just kind of a flat circumstance, but that was one of the bigger drawdowns we've seen in the last week. Dipping from that signal, which was right around 46, to cover around 22, so that was not a whole lot, but because most of the action's been to the upside, and this was actually a little bit more activity when that happened. So we'll see a little bit more of that. People see they dip, they buy it at dip, and eventually it's a question of whether or not they can get back to the previous peaks. For now, that'll do it. As always, I will update you on the Skype chat and give you any details of further changes in the program, which continue to happen as we go forward. It should be even clearer. Trade well. We'll talk again later.